guess this is everyone's comment. I could give them enough 5 minutes. Oh, 22. Nice. Well, Danny, do you think I should give them 5 minutes?
No, let's just run it now, bro.
Bro, wait, you're so impatient.
No, bro. Everybody should have been here, bro.
Because they're just coming. Like, now. Like, just in the last minute, now 5 joined. So, you know. Um, where's this? Yep. Thank you, Freddy. Thank you, Freddy. Um, okay. Let's see. Download. And I have like no script, no nothing, guys. So everything that I'm saying is completely from the heart and true. There we go, 27. And if I had I got a presentation on us for sure. One thing though,
W, bro.
not everything I'm gonna say is random. That's all I'm gonna say. So you can watch the recording as much as you want. And don't. I am gonna mention a lot of stuff, and if they're overlooked, and if you don't listen to them, you might miss certain pieces of the puzzle, which can increase your win rate. Um, Let me just do this. All right. Share my screen. So how are you guys doing today? Just before I start, I want to know how everyone's doing. I want an interactive lesson. I don't want people not to be typing stuff in the chat. I want questions to be asked, or this is not going to be a great class. If they can type, the more questions I get asked, the more likely I'm likely to spill something. Just saying. So if you guys are really interactive, I'll probably leak some stuff you guys should know about certain market assets and so on. Maybe if I do mention it, then you guys will understand what I mean by watching this recording back. Um, how can I like full screen this? Present. Yeah. All right. Let's do it. So I'll be talking about quarterly theory today alongside with turtle soup. As we know, quarterly theory is the deciding factor, and we use it to basically know what time and price is likely to do next. Without quarterly theory and turtle soup, I think all of us here would be lost. I know everyone that's listening to this is probably thinking to themselves, so what is turtle soup? I don't use turtle soup. That's not my entry pattern. Again, that might not be your entry pattern, but you might want to have a look into it and why it works so well, and then how you can use it to your advantage. I want to make sure everybody understands certain parts of turtle soup and quarterly theory by the end of this lecture. So if you're confused about something, Ask me a question. The more questions I get, the more answers you guys will receive. That's just the way it is. Right. Let's start. What is quarterly theory? So, quarterly theory is a idea presented by ICT. He once talked about 90-minute cycles, and I'm gonna say this again. He once talked about 90-minute cycles. He's never mentioned anything else afterwards about quarterly theory and cycles. Um, however, in my opinion, he is the founder of quarterly theory, creator. He has stolen some ideas by the charter members that were working on quarterly theory and 90-minute cycles because I have access to the charter logs and all the conversations they've had, and I've went over all the conversations they've had talking about 90-minute cycles, 20-minute cycles. So these are the two algorithms that we know of so far, AMDX and XAMD. Accumulation, manipulation, distribution. X standing for continuation or reversal. X, AMD, continuation or reversal, accumulation, manipulation, distribution. Now, they has said that these are the two algorithms, and Romeo basically suggested that there's more than two algorithms. And if you have ever watched Day and Romeo, and if you haven't, I suggest you watching Day and Romeo after this lecture, finding the courses online and watching them, or paying for them, whatever way you want to do it. I recommend watching the courses and writing down everything they're saying because it's not random. Especially with Romeo, it is not random. And if you're gonna sit down and binge watch everything they're saying and showing you, you're not gonna learn. You have to write down everything they're saying. That's how you get the answers to all of this. So, to begin with, when we started learning quarterly theory and using quarterly theory in the charts, we should start learning these two cycles, AMDX and XAMD, as they're more visible and you can see them clearly on the charts nearly every day displaying themselves. Right. So here are the cycles. This is not private knowledge. This is public knowledge. Everybody knows about this. Just in case you didn't, I did want to list them. Now, I will go into depth to explain why it's important to use the cycles and why they are important. Because I'm sure you guys have heard many terms of power free, many stuff like that. Give me 1 second, please, guys. Alright, let's continue. I hope you guys have taken a screenshot of this. So, I don't know if you guys have tried to implement quarterly theory, or maybe this is your first time hearing about it. But, I mean, it's there. It's in the nature of a candle. Every candle has a opening, a midpoint, and then a closing. So, whenever a candle is opened, it has to print a wick before going to its destination. That's just how a candle works. And the way we use quarterly theory is we can either do it with the daily candle, the weekly candle, or the monthly candle. and some people narrow it down to the 4-hour candle, each 4-hour candle, 159, 159. Um, how we do this is we separate the candle and the mechanics of the candle by using quarterly theory. So yes, we can look at this with the lens of power free, accumulation, manipulation, midpoint, all the candle, and then distribution. Remember, if a candle opens and doesn't print a wick, then this is an efficient market. So yeah, any more questions before I continue forward?
Nah, bro, nothing.
I know some people definitely haven't heard about this or are a bit confused. So some of you guys are probably confused and wondering, how can we use this to our advantage? I'm sure if you rewatch this recording, you're gonna have a better understanding of how this can be used to your advantage if you haven't picked up yet. Remember, what quarterly theory helps with is catching this low right here and holding the entire expansion. Also, yes, I'll be going over some examples on the charts. If we look at the cycles that ICT has given us, or the kill zones that ICT has given us, they perfectly align with Q2 London and Q3 New York right here. And what they basically did is he took this and he narrowed it down for us. 20-minute cycles and even less. Because the cycles are fractal. Same with price. Price is fractal. So are the cycles. Even in a 1-minute candle, there's nanocycles going inside of it. Manipulating, distributing price, and accumulating. So how do we use this to our advantage? If we know that there's a 70% chance that Q3 forms the low of the day, we can use this to our advantage to buy the low at a particular key level and hold the entire expansion higher. There's a particular way of doing this which I will explain to confirm that the low is in. Any more questions?
Nah, bro, all good, all good.
Here's something that people didn't know. From 6 o'clock to, I'd say from 6 to 002 is the 9-hour accumulation range. And remember, based on news events during the week is how we determine where the high or low of the week will form, which I'll talk about more. So can Q1 be the high of the session even if it's accumulation? This is this is something that got Freddy confused yesterday. Same with Metro when I mentioned it. How can Q1 be accumulation but also high on the session? Well, surely it's because Q1 can be also fractal. If we break Q1 into cycles, just like how I mentioned earlier, there's cycles within cycles. It's all fractal. We can see that the last, third, and fourth cycle of Q1 is tradable. I'll show an example where Q1 forms the high, just like last week, Q1 formed the high. Monday, last week, because of the market profile, was the high of the week, which is something you guys should look into. Why was Monday the high of the week last week? And why do we have an entire expansion lower? And why is this so important? Because everybody's overlooking this. If we know Q1 has the probability of being the high or low of the session, that means we can hold from Q1 all the way to Q4, basically, the entire move. That means that we can buy on Monday and hold it until Friday. That means we can buy on the first week of the month and hold it until the end of the month. Same with the year. There's a way of determining this. But you have to listen and understand the mechanics of quarterly theory to understand this. Otherwise, you're going to fail. Now, Ice mentioned something very important in score content, which I'm guessing most of you guys overlooked. It was in the video IP to data ranges. And he said that this is basically him hinting towards quarterly theory. He said that there's a change every 3 to 4 months. He's basically saying that Q3 or Q4, the market shifts paradigm and completely reverses. Now, I don't know if I need to repeat myself again. But that means that during Q3 or Q4, ICE is basically telling us that the low should be in. And there's a way of confirming it. Yes, and then look forward. So you said that's 20, 40, 60 day from any reversal, correct? Yes. And then you can do your look forward as well. So that's something to take note of. Technically, with all this, you can catch, if you listen to what I'm saying and my teachings, you'll be able to catch the yearly low if you wanted to hold it for that long. Personally, I couldn't do that. Yes, this is being recorded. So there's another thing that I want to talk about with Q1, and that's projecting the high and low of it. So if Q1 is accumulation, maybe I'll show an example in a bit. I was showing an example to somebody earlier of how if Q1 is accumulation, there's a way of adding standard deviations and finding where the high or low is going to be of Q3 and Q2. Depends which one makes the low. I'll demonstrate it later, and then you guys will see how Q1 can be the deciding factor of the exact particular spot that the low forms or high. It's extremely big. Okay. All right, let's look at an example. This is an example of Q1 being a high. Here we can see Q1. So how is Q1 the high of this entire session here? And this is the other highly correlated pair. I believe this is NASDAQ and this is ES.
Is it because of the SMT that we had?
You're correct. There's an SMT here. But the reason it forms during the reason this high doesn't get returned to is because the high forms during Q3, Q4 inside of Q1. Now, I'll go to the lower time frame.
Oh, I see.
So we can see that Q1 has a function of being accumulation, right?
Yes.
Right here. And we can see in the last quarter, the third quarter and the fourth quarter, we formed that SMT and we never returned to it. So this can be used fractally on the monthly, the weekly, and the daily chart. This is how last week, if you knew about this, you could have caught the high of the week and held it all the way down. Because this looks the same. It really does. Just like last week's Monday. So yeah. Always look out for the last 2 quarters of Q1. They're tradable. And I'm telling you again, the last 2 quarters of Q1 are tradable. So if you want to trade on the weekly time frame, you want to be using the True Year Open Q2, which was April. And then if you want to use the daily time frame, you should use the True Month Open, which is the second week. And you should use the daily time frame. And if you want to use the 4-hour time frame, you should use the True Week Open, which is the second week. If you want to use the True Day Open because you want to trade on the one time frame, you should use the London Open. The first third of Q1 is untradeable, and you do not trade after holidays or prior to NFP, CPI, or FOMC. Every cycle has an opening, a midpoint, a close, just like a candle. They're both fractal. They work together. True opens of cycles can act as support or resistance. When you combine a true open with a breaker, and if it has an SMT at the lows or high, that breaker is gonna hold more than any type of other breaker. No, I'm not gonna repeat myself again. You can write what I'm saying down if you want to. You can watch this video back if you want to. We don't just look for any SMTs to form. I know SMT is a super overlooked concept, and most of you are gonna leave this class, fuck this guy, Aeon, he doesn't know what he's talking about. SMTs mean jack shit. I know at least 10 people here are gonna do it, and they're gonna be unprofitable, and they are unprofitable because they're not using SMT alongside Quarterly Theory. But it's not any type of SMT, like I said. We look for particular ones. This is why I'm mentioning the revolving true opens of Q2 and why they're so important. You want to look for SMTs that form under Q2 open or above Q2 open, because that's the real opening. This is the real magnet to the price. When price is below the Q2 open, the Q2 open acts as like a magnet. So anything below is a discount, and anything above is premium. And what confirms that the high is in is an SMT. SMT formed at a particular time, not just any SMT. And there's many different ways of looking at an SMT and the kinds of SMTs that show up. So let's say we're below Q2 open and we have an SMT that formed at the lows during Q2, Q3. This stop loss placement at the low will be the highest probability stop loss you will ever have. And you will see, because of the SMT forming around this time, right here, it will push away from your stop loss and then gravitate towards something else, like a different key level. I know. I'll show chart examples. Yep. Different forms of SMT. I will talk about one type of form of SMT. I'm not sure how much I'm gonna share, but I will talk about another one. And I'm not talking about the hidden SMT. I'm talking about something else that everybody's completely oblivious to. So why should we use third of soup and not market structure shift? You can use market structure shift if you want, if it has an SMT. If it doesn't have an SMT, then it's a pattern. if your market structure shift doesn't have an SMT, it's a pattern. It's up to you if you want to trade market structure shifts. I'm personally prescribing you not to because they're not as high probability. So now I'm going to show you some examples where some chart examples where Turtle Soup works better, and by the time you even get a market structure shift, it's far too late to get in. And the reason if you traded the Turtle Soup, it would have worked better, and you would have been in and caught the entire move from the top or the bottom. All right, let's have a look at some examples. Here we can see the Turtle Soup right here. Now somebody might ask me, what is a Turtle Soup? A Turtle Soup, in my definition, is an SMT at a particular specific low that was not formed during a random time that's an SMT and a Turtle Soup. So one takes the low, one fails to take out the low. This is a Turtle Soup, and this is the failure swing. Why is it a failure swing? It fails to go to the low. What is it signifying if it fails to go to the low? Strength. It's rejecting from here. So Turtle Soup is an SMT by my definition and by Romeo's definition in his new course, where he pretty much confirmed most of my ideas. So does this make sense to everyone?
Aeon, can I just quickly ask you a question, bro?
Yeah.
So at like you mentioned specific times. So is that like during kill zones? Should we look at SMTs during kill zones?
Okay. So if you're trading the intraday chart
Yeah.
and you want to trade on a 5-minute, 15 minutes, you should trade during Q3, which is New York, inside of Q3, 90-minute cycles, and look for the SMT to form there, under the true open or above the true open.
Okay. Perfect.
So when an SMT forms, like just like in this case here, the traditional way of trading Turtle Soup would be taking this low, but then this would be weaker. There's a
Mm,
way of calculating. There's a way of calculating and knowing if this is going to be expanding higher than this one. I know the way to do it. I'm going to talk about it later, which
okay.
is something I shouldn't be doing. I shouldn't be telling you guys why the Turtle Soup is sometimes stronger than the failure swing, because we can see clear resistance here. This is the true resistance that all the retail traders talk about, support and resistance. This here would be the true resistance once an SMT forms. And you don't want a small SMT. Not going to repeat that again. So once we get the SMT, we get our CSD candle of confirmation for our entry, and we enter on that. And then we hold it until the high. When you're trading SMT alongside with Turtle Soup, so one takes the low, one doesn't, you won't need any other PD array. All you're going to need is SMT and time, because
Yeah.
this works. This works, but this only works or works best during particular times of the day. And that's what I'm trying to tell people here.
Yes.
Sequential SMTs during particular times of the day will have lows and highs never to be returned to. All right, let's continue. So here's the 15-minute time frame. This is what I would trade. As soon as we get the big SMT here, and we get our CSD candle of confirmation, then we can see that this here is basically the prime reversal, and this is the confirmation for the reversal. Sorry for stop. I'm just reading the chat. Yes, sequential SMT is the most important SMT. So, big SMT, CSD, that's your entry right here. Hold towards the high. You can put your stop loss here if you're ballsy, or you can put your stop loss here if you're so smart. I will talk about how the turtle soup is stronger sometimes. I'll explain it. And by stronger and weaker, I mean one reaches the high, one doesn't. In this particular case, both reach the high. But there's sometimes scenarios where the turtle soup doesn't reach the high, and there's a reason for it, and I'll explain it. Here's another good example. What can you guys see here?
Mm, SM or Turtle Soup at the low on NAS to the left, and then CSD on the 1 hour on the right on S&P 500, and then yeah, I don't know.
All right. If we have a look at this move down here, this is the kind of moves you want to be trading. When there's a news release, I traded one like this last week. When it's accumulating prior to a news release, you see one of them, and I shouldn't be saying this, coming down, sweeping the low, the other one failing, and then shooting higher. You want to trade this one. Now I'll have a look at the lower time frame. And notice how this one doesn't reach the high, but this one does. And the time it does. Here we form the black candle, here we form the green candle. Here we go. SMT. And look how weak it is to get up there. After we had the massive SMT and the CSD, notice the respect of the CSD candle, a true support, and expansion higher.
Yeah, that's cold. That's cold.
This is enough for people to, right now, with everything I've said, it's enough for them to leave, never come back, never listen to anybody else, no mentor. Because I learned all this by myself, by rewatching courses, and writing down everything they're saying, going in the charts, and looking at price and why reverses. Studying every reversal from 2021 until now. And some help by my best friend Daniel, who's had, I think, 8 years of experience in the industry. I think so, 8 or 9. Sorry if I'm mistaken. Yeah, thank you. All right, let's continue. Every reversal forms of an SMT, whether you like it or not. Even if both of them take out the low right here, I can assure you, and you can send me a chart. after this live stream. If both take out the low but reverse, I can assure you that there's a reversal or an SMT at the lower time frame, like the 15-minute or 5-minute.
Aeon,
Yeah.
sorry, but I just want to also ask you a quick question. So, in regards to the SMT, what's the best time frame to be looking at? Because I've been kind of struggling, like through my back testing, through yesterday and all that stuff,
1
like
hour.
trying to find 1 hour. Okay, and
1
then
hour
the
and a 5-minute CSD or 15-minute CSD.
okay, 1 hour SMT with 5 minutes CSD or 15 minutes CSD, right?
Yeah.
Okay, and how do we determine whether to use the 5 minute or the 15?
Um, Sometimes in a 5-minute you see a range building prior to the explosive SMT. If I can, I'll show you one later. But
Okay,
sometimes prior
sure.
to a big SMT, there will be a 5-minute range building.
Okay,
A third soup of the range, and then moving higher. Here,
okay,
we have a look here. If you look at all this here, it's a range, soup, and then moving higher.
yes,
And then if we have a look here, range, soup, higher, SMT. It's all fractal. Um, so sometimes we have scenarios where both highs or lows are taken, but a reversal still happens, and you're sitting there confused. Why did this reversal happen? There was no SMT. Ayan's a scammer. Um, Block him. Whatever. If you go in a lower time frame and watch the reversal, there will be an SMT forming at the lower time frame, causing the reversal. There cannot be a reversal without an SMT, and I'm gonna say that again. There cannot be a reversal without an SMT. IST calls it crack in the correlation. But then again, it's not every SMT that you should trade. It's particular ones, particular times. So here's the key to knowing if the turtle soup or failure swing is going to be stronger. This is something that everybody overlooked. I didn't think of. They would just take the turtle soup or the failure swing and completely disregard it. And sometimes you'll see with the failure swing, it doesn't pick up the pace, and the turtle soup actually expands higher. And this is how we know. We measure the CSD candle and which is stronger. There's a lot that goes behind this as well. There's at least 3 things that follow this one, but I won't talk about them now. I just want to explain this in a chart. Boom. Wait, let me see. Here we go. So we have a giant SMT, right? This is an example of this. Trust me, this is what I trade. uh, yeah, you can check out my Twitter on my profile to my link tree. Yeah, you can see my Twitter there. So, giant SMT, and then look at the CSD. This one clearly engulfs this one. Strong. This one has a hard time. And it's a weak candle. Did I have another example of this? Let's see. I mean, even here, we can see just the clear significance of like this candle right here. We can see that it does not engulf. However, here, it engulfs, doesn't even doesn't even take this low. I shouldn't be saying that, but that's another major thing. If you see an SMT right here, as the CSD happens as well in the lower time frame, it's major. I won't be saying much. You guys haven't been asking me enough questions for me to leak information. But look out for the CSD. Which one makes a stronger CSD? On the 5 or 15 minute after an hourly SMT. After that, 5-minute CSD. So, did I talk about time is the question. So, how do I explain this? These SMTs, or every single reversal that I've picked here, is under the Q2 open. All of these entries you see here are during Q3. The Q2 open is around here somewhere. I don't have it marked out, but I know it is because this is when I was collecting data from 2021. So when you're below the Q2 open and this forms, I can guarantee you that you can hold the entire weekly expansion, if not monthly if you wanted. If you want the best times to trade, look for a setup between 8 a.m. till I'd say 11:40. Wait for a giant SMT to form like this on the hourly, just like today. But don't trade Mondays. I don't recommend it. Then wait for the 5-minute CSD. Now, I feel like I should ask Danny to showcase his trade from today, but it was Monday. Danny, how do you feel about sharing your trade from today? A trade recap. Still going. And you had what? How much RR are you up? Nice. Any questions?
Yeah, bro. I'm just trying to like I've been noting down and everything that you've been saying, just noting down so that I don't miss anything because I want to backtest every singular detail. All right. But yeah, so the time thing, I think, because obviously we need to understand that time is fractal, right? And with that being said, that's the part that gets me, right? That's the part that gets me. So you mentioned the 8 o'clock window to 8:40, right?
Yeah. Look for a 1 hour SMT. That's what I said.
Yeah. 1 hour SMT. Just let me SMT. Okay, and okay, so I just want to get back to the consolidation, right? Um,
Okay.
in order for us to understand it being the high or low, right? I said that the key difference was the SMT at the highs, right? And then you mentioned the if you go to the lower time frames, those 3 quarters within that. Can you just touch down a little bit more on that, please, bro?
What I want to mention is, guys, it's not the fact that there's a CSD candle pattern. It's not the fact that this happens. This is a pattern, guys. This alone itself is a pattern, and it's not going to work unless there's an SMT at a particular time of the day and particular day of the week. This will not work. Don't do this on Mondays and don't do this on Fridays. Do this on Tuesday, Wednesday, and Thursday. And I said in the chat that Wednesday cannot be the low and high of the week at the same time. Yes, News, yes. What you want to do is, here's something that everybody doesn't know about. If Monday has high news, Monday will be an expansion day, leading Tuesday to be an accumulation. Now, if Tuesday is accumulating and Monday is expanding, that means Monday is going to leave the high of the week, and then during Wednesday, we should leave the low of the week and start retracing higher. And then Thursday, we could get a reversal. So let me explain this. If Monday comes lower because of news, we can expect Tuesday to accumulate and then Wednesday to expand, creating the low as well with an SMT.
Yes, I see.
So this is one way of knowing that Wednesday's gonna be high or low of the week. This is like 80% chance. But Tuesday has to do nothing because of Monday having red folder news. Otherwise, this will fail. It also matters what week of the month it is. Remember, we don't trade Q1. That means we don't trade the first 3 months of the year. That means we don't trade the first week of the month. That means we don't trade Monday alongside Friday. Alongside Friday, I mean. Friday has its own function. But yeah, I mean, there's so much more I know I do want to say. But I'm gonna answer a few questions until Danny's back. Okay. What do I mean by Friday has its own function? Friday has the function of retracing 20-30% of the weekly candle. That's it. And that's completely outside of quarterly theory. The reason it does that, and I don't know if you guys know this or should know this, the reason Friday does this, it's so the market is random. If the market expands on Thursday, right, and leaves a high in, then it's not going to look legit. On Friday, we'll retrace, so it looks random. Yes, to make it difficult for retail. That's another thing. Keyword, turtle soup. Don't don't just pick any high or low, guys. When when we say turtle soup, and this is what I mean. When I say turtle soup, or I write on the chart turtle soup, there's an SMT there. That's what I mean. And I've studied days trades, ICTs trades, the executions, the particular minute, the particular second of the minute. It's all about coming together with the cycles as one and SMT at particular times. You're not gonna get any more high probability. You're not gonna. This is what I mean. Sometimes I am rough on people when they're trading patterns, but it's because they're not implementing the most important things, the most overlooked things, time, then SMT. But yeah, I uh, I guess we don't have any more questions.
Yeah, bro. Thank you. Thank you so much for this. Also, Dennis, thank you so much, bro. Appreciate everything.
What I recommend is forgetting about us watching. And we're not finished yet. I do want to mention a few more things.
Okay.
So
Yes.
Q1 can be really important, guys. If you're trading, if you're looking to trade Monday and it has news, red photo news, that's a very high probability chance that you could catch the high of the week. Just like last week. I didn't trade Monday because I was busy, but if I did, I would have traded the short because of the news release and the SMT on the lower time frame. Just trade the last third or fourth quarter of Q1. That's it.
Wait, sorry, bro. Can you just say that again? Sorry.
If you want to trade Q1, trade the last third or fourth quarter of Q1.
And
Yeah.
Q1 meaning, because like Q1 can be like Monday or Q1 can be
Yes,
like the 90-minute Q1 or
I'm
like.
talking about Monday.
Okay. Okay.
If there's an SMT between Q1 and Q2 at the low or high, that leaves Q1 to be the high or low of that session. That means you can hold your trade throughout the entire month, week, year. Yes, I will do the standard deviation. You guys want to learn about them? How to project the the high of the day or of the week or low of the week?
Yeah. That's
Here it
right.
is. So you take Q1, high to low, you add the standard deviation. Here are the settings. You add the standard deviation to it, and watch as it reacts to the 0.5 level. Look here, 0.5, higher. 1.5, lower. And look, I've also marked out, because I'm nice enough, to those watching, where is the highs and lows formed. Q3, Q3. And if we narrow it down in these cycles, it will be also Q3.
Bro, this actually confirms what I was saying because like a couple months ago I was talking about Q3 and Q3 and Q3 and how the highest probability status will form there. I just didn't understand SMT, bro. So if you have Q3 within Q3 within Q3 at a certain time with SMT there and oh shit.
Notice the particular reaction to those levels. That's all I'm going to say. Those levels are not random. There's a particular thing that I do want to go into teaching, and there's so much more I do want to say, and so much more that I want to teach and explain. But I'm just not going to do it right now.
Yeah, bro. Yeah,
Um,
we get it. We get it.
I think this is so much information for the average mind to leave here mind blown. This will increase everybody's win rate by 80% at least. I'm telling you, if you mix this, and I mean this word by word, you'll have 80% win rate. If you hear everything I said in this presentation and use it completely, the entire guide, and you don't mess it up, I'm telling you, you'll have an extremely high win rate. Of course, take partials. That's part of the high win rate. Taking partials. If you're not taking partials, you're pretty much gambling. Um, so yeah, if you guys do want to know more, want to learn more, because I am planning to start teaching. I'm starting to open the Discord if anybody wants to join, learn from me, but most importantly, learn from Danny because he has 9 years of experience Was it 9 years? I don't remember. 9 years? 4 years, guys. And you worked at a trading floor where people used to copy your trades. Am I correct? Yeah. We basically the reason I'm coming out here is because I want people to, because I'm nice enough to share this. I mean, I've cracked all of this because if you watch the Romeo courses now, after everything you've heard by me, you understand what he means when he says certain sentences. Because if you just watched it in hindsight, it doesn't make sense. Same with Day, it does not make sense. Day and Romeo are like two highly correlated assets. And that's a quote by me. You cannot watch one without watching the other. You can't study the other one without studying the other. They work together. Study what they're saying. Check what they're saying online. Because they're leaking so much information. Lowest time frame of execution for me comfortable that I'm comfortable with 5 minutes. That really matters in one thing as well. Which I will delve into in my private Discord, but like if you think if you guys think this is so much, like just yes, like there's so much I want to say. And I almost said earlier, and there's so much stuff that I have said and like hidden in my words in this lecture. But yeah, there's a lot I want to say. There's a lot Danny wants to say, but he doesn't have the chance to because I'm talking. The it's in my profile if you're interested. So I will basically turn $20 into $50,000 on my Discord, and I'll do it live, and it'll be for everyone to watch. I'll be posted on YouTube. Anyway, I'll turn $20 into $50,000 because um yeah, the year is picking up. Q2 and Q3. We're in Q2 cycle of the year. Price is starting to pick up. So yeah, that's my goal. We'll also do like monthly giveaways and prop firms on like 50,000, 50Ks. Yeah, yeah. Flipping small accounts. But yeah, basically, I mean, I think my legitimacy will come through this lecture after you guys study Romeo and Day, and you guys will understand and prosper that the things I've shared today shouldn't have been shared. I shouldn't have told anyone, but I feel nice enough. Maybe it's the Holy Spirit in me talking and just leaking all of this. But I do want everyone to prosper, be good, and also make money. For me, it feels great. I like teaching. I like talking. I like interacting with other people when I'm teaching a concept. And yeah, when I'm live trading, you guys are pretty much gonna copy my trades if you want it. It's, but I'm not a financial advisor, obviously. But I am gonna flip $20 to 50,000. That's my promise. What even? Yeah. I mean, yeah. It's either that or we'll do like no, we'll do $20 to 50K, and then you guys can watch me do it live. It doesn't matter. Dan, is there anything you would like to add to my presentation or to the comments or the people out there? Anybody have any questions for me or Danny? Please ask me questions. No, I'm going to use 500 leverage from $20. Not 1,000, 500. Danny will teach his method of having 4 point stop loss and like and then I'll teach my way of. I mean, there's so much that I've taught in this lecture that it's enough for you guys to be mind blown and like walk away and make more money than majority of people on Twitter. And this is what I mean. Watch this lecture, watch it back, watch Days and Romeo's courses, and then when you come back to my lecture again, then you will know that I am talking the truth. And you will see that some of the stuff they're saying, and you see that the stuff that they're saying, I've caught on because I've written every single word with pen and paper. I've written it all down, studied all their entries on Twitter that they posted and on their private telegrams. There's a reason I'm trying to teach this, even though I'm not saying as much as I want to say, and there's so much I want to say, but it's everything. Everything has to do with time and SMT. Time and SMT at particular times, which I will be teaching, obviously. And then there's another thing, the 2021 to until now, the data collection book that I have of all the reversals, that will also become public knowledge.